Welcome back to the Trading Bootcamp Part 7. This series is a complete trading course to give you all the tools you need to get stuck in the market and start winning more trades. In this lesson, we're going to look at support and resistance levels, what they are, how they work, where we can find them, and how we can use them in our trading. So let's get stuck into it. So when we're looking at support and resistance levels, there's four main types of support and resistance levels we can see in the market. All right. First one here. Support only, okay, a level in the market that is shown to be support only. So over time, we can see that price has bounced off this level and it has been support only. Okay, now the opposite to this is resistance only, okay, a level in the market that has shown to be resistance only. We've seen price come in and respect that level multiple times, okay? Now, one important note to make is for a support or resistance level, we want to see at least two touches on the level to essentially validate that level to us. Okay, so we've got our support only, which is acted only as support. We've got resistance only, which is acted only as resistance in the market. Then we get a little bit more complicated. Okay, we see these SR flips. Okay, so this example here, it was support, we lost it, and it flips to resistance. Okay, support or resistance flip was support through here, becomes resistance here. Okay, and the opposite to that is a level that was resistance, price breaks through, flips it, and becomes support next. Okay, now these are the strongest levels in the market. We'll get to this more when we jump into the charts, but these flips, these inverse support and resistance levels, very, very strong levels in the market. But like I said, we'll get more into that. It's important to understand these four concepts: support only, resistance only, was support, now resistance, was resistance, now support. So when we're using our support and resistance levels in the market, we expect two types of reactions from a level. Okay, so if price is below, okay, so this is our support and resistance level in the market. Okay, price is below, heading towards this key support and resistance level in the market. Okay? Key support and resistance level. We can build trade ideas based on this level, based on two things. Okay, we can look for a rejection of the level. Okay, we know it's a sensitive level in the market that's likely to give a reaction. We're expecting and can either see a rejection or an acceptance if we break above a level. Now, it's important to note with an acceptance, the longer price is above a level or below if we're coming in the opposite direction, the longer price spends beyond the support and resistance level, the stronger or more likely it is to accept. Okay, time equals acceptance. So when we push through, the longer we're above here, the more likely we are to hold this level. Whereas in this example, okay, we pushed, got above just for a minute, got back inside, retest, and pushed lower. Okay, so with sensitive levels in the market, we either get rejection from the level or acceptance above or below. Okay, be same in the opposite direction, support, lost it, spend time below it, and then you sell off with acceptance below this level. So when we're marking our levels in the market, we don't see them as brick walls. We don't expect price to exactly come in and bounce off. Okay, it's likely to give a reaction if we've selected the best support and resistance levels, but we're either going to see rejection or acceptance at these key sensitive levels in the market, which can give us some areas to do business with our trading to either continuation trade or look for a rejection short in this opportunity. Now let's look at ranges. Okay, we've covered ranges in some previous lessons and know that they're a very rotational environment, but I want to look a little bit more at the anatomy of a range because essentially this gives us some really key support and resistance levels. Okay, so when we're mapping a range, and this can be on any time frame, and we know that the price or the nature of markets is price is fractal. But when we're looking at a range, this can be any time frame. The anatomy is we have our range high, okay, which acts as resistance. We have range low, which acts as support. And then we have the EQ, okay, the equilibrium, the middle part, which also acts as an SR level. It's a bit of an inflection point in the market. Okay, so when we're in a range-bound environment and you're looking for trading opportunities, the highest probability is going to be looking for shorts at the range high, longs at the range low, and then using the EQ as a bit of a target. Okay, maybe if you're longing at the range low, EQ can be your target. Just like if you're shorting from the range high, EQ can be your target. We expect it to be quite rotational. We can also trade this with SR flips. In this example here, comes in resistance. We break through our SR level, which is the EQ, and continue higher. Okay, now the best trades that I find within a range are when you get a deviation. So this brings in our concept of liquidity sweeps. Okay, so potentially price pushes outside the range, sweeps liquidity, gets back inside, then it's that SR flip and you can trade from this level back down. Same at the range low, okay, deviate outside, get back inside, retest the level, and you can trade from these levels. Okay, so the anatomy of a range is very important to understand, especially when we start marking ranges on our charts. We need to know the anatomy of the range low, the range high, the EQ, which essentially they're just fancy words for horizontal support and resistance levels. But when you actually understand what they are, okay, they're not just imaginary lines, they're there for a reason, because this is the area of balance in price, very rotational, and we know what those levels mean, and we can use them to build some trade ideas. All right, now let's look at some key SR principles. Okay, these are some good rules of thumb to keep in the back of your mind when we're using support and resistance in our trading. All right, now the first one, inverse last is the strongest. Okay, so I briefly mentioned this at the start of this lesson. Okay, so let's just look at this as our support and resistance level. Okay, what this means is with inverse last stronger, it means that if this is a level of support, then we break it and lose it and it becomes resistance. This is stronger than just trying to buy support itself. Okay, when a level flips, okay, it could be resistance, we break through it, it becomes quite strong. Inverse last is the strongest because of all the orders changing here and the positions closing and opening when we retest this level. So with a sensitive level of the market, we flip it. Essentially, it's called an SR flip. These can be very, very strong levels to trade in the market. Support falls to resistance, right? You can use these to stack confluence for your trade ideas. Now, weaker with recurring tests, okay? With a support and resistance level, often you'll see this sort of like bouncy ball behavior where we sort of have a level and each time we bounce off it, it's a little bit lower, a little bit lower, a little bit lower. Essentially, we're just hammering this level, okay? We're putting in low, touching, filling up all the orders at this level, and eventually we may fall through the floor, and that's when you can get your resistance flip like this, right? The same when we're looking at a resistance level, gets weaker with recurring tests. Okay, each time we touch it, it's getting a little bit weaker because we're filling up orders, and when we flip it, we can get those really nice trading opportunities. Okay, but we don't want to be just buying the breakout here. Okay, a lot of traders get stuck in this position. We have a resistance level in the market, price pushes above, they buy automatically, and they just become liquidity. Price gets back inside, stops them out. So what you want to be doing is waiting for this time and acceptance above the level, then look for an entry trigger here on the retest to continue getting long. Don't just blindly buy with market orders on a breakout. That is how people get wrecked, and that becomes liquidity for the market to move in the opposite direction. You want to see that confirmation, all right? Now, first test equals best test, right? So we can see that with a support level flips to resistance. The first time you trade it, this is going to be your best test rather than coming up again and then it pushes through, okay? There was a trading opportunity to support, trade off the resistance level. The previous support flipped to resistance. So first test, best test, the more times we hammer a significant support and resistance level, the weaker it gets, okay? So this third rule or principle ties quite nicely into this second rule, all right? So let's jump in the charts and start looking at some support and resistance levels, how we can map them and start building some trade ideas. All right, so we're going to start on the high time frames here on Ethereum and map some really key levels in the market. Now, it's important to note that SR levels are not a precise, exact price point in the market. They're generally a bit of a region, okay, especially on the higher time frame. So there is also SR levels everywhere, okay? You'll see little levels in the market all over the place, but we want to be marking the most significant and important sensitive levels in the market that become rotational, essentially our key range highs and range lows, and also a very strong SR flips in the market. So when I'm just looking at this chart, this is on the higher time frame, I can see some pretty significant chunks of price action, right? I can see this is essentially a big chunk of price action here. Here's another chunk down here, and there's another chunk there. Now I can see that there's a very strong support through here. I can say we lost it very aggressively, and then I can see price stay below it for a long time before it broke it very aggressively. So to me, I can see support, resistance, support, okay? Very, very clear support and resistance level here. So we can go ahead and mark this here, right? And like I said, it's a region. It's not exactly a science of an exact price point. So you can use sort of your own discretion when you're marking these SR levels. But when I'm marking the point, I like to focus on the most recent price points to where we are currently, okay? Rather than focusing exactly on these swing points, if I'm going to adjust it, I want to adjust it to most recent price action. And I like to focus on inverse last, right? Rather than starting to map support here, I'd rather focus on previous resistance, because this to me is going to be stronger if price comes to here compared to just a support level, because we know support once it gets hammered, whereas this is a fresh SR level. So price currently looking quite heavy. If we push down into this level here 2,800. This is a very significant support level. We can see support, resistance, and then previous resistance becomes support. All right. So that is a very, very sensitive key level in the market. We can go ahead and mark some more. Okay. So to me, up here, we can see this kind of range high. And to me, these are sort of deviations outside the range, very aggressive. So we could go ahead and mark this as a bit of a support and resistance level here. And the reason I would mark this is I would see these moves outside as deviations. Okay, I can see resistance here, touched here before pushing up. So to me, that's a very significant level in the market. And every time price is broken out of here, it's deviated, got back inside, deviated, got back inside, deviated, got back inside. Okay, so very, very clear to me. Then we come a little bit further, we can actually see that this price action back in here was the top. This was a resistance, and this acted as quite significant support over here. Okay, so these are these key levels, and you want to be mapping these on the higher time frame to get your ranges you want to work in. And when you get ranges like this, you want to be looking for shorting opportunities at the top, longs at the bottom. Same here, shorts at the top, longs at the bottom. Look at these deviations, get back inside, deviations. And then if we accept outside these levels, you start looking for your next level in price. Okay, but you'll want to see that acceptance outside. Whereas here we had a big liquidity sweep outside, got back in, big liquidity sweep outside, got back in. Same at the bottoms. Okay, so very, very simple. That is how we can map our support and resistance on the higher time frames to give us our ranges. So when we're in a range, we can essentially say the top here is expensive, the bottom is cheap, and we assume we're going to stay in a range until proven otherwise. Then when we get out of that range, we look for our next area of balance and our ranging environment. Okay, because we know markets like to move in patterns of imbalance, ranging balance, pushes through imbalance, creates more balance, up and down, and so on. Okay, so you get these opportunities to trade these ranges on the way up and the way down. Okay, meaning that you can have a lot of really profitable trading opportunities even when the market is in a rotational environment like this. You can look for deviations and sweeps at the highs and the lows. All right, so let's jump to the lower time frames and look at how I mark my support and resistance levels on those lower time frames day to day. All right, so now I'm looking at a lower time frame chart here on Ethereum, and I just want to map this price action here. Okay, this is the recent price action, and I want to look at those significant levels to get my ranges and looking for my trades. Okay, we understand that price moves between balance and imbalance, and we look for these ranges where we can build some trade ideas. Okay, so for me, really significant to focus on inverse last. Okay, what are levels below price that used to be resistance that are going to be support, and what are levels above price that used to be support and now likely to be resistance? Okay, so the first one that comes to mind and catches my eye was this level down here. Okay, so for me, this was very significant. This was a lot of resistance here. Price broke out of it and then came back and we supported a lot. Then it was very significant when we lost this level, became support again. So essentially view this as range low support, and these as deviations outside this level, all deviations here. Okay, now recently this looked quite good with a deviation, got back inside, yet price is now nuked and coming down to this equal low liquidity that we talked about. Okay, so that is one significant SR level, and how I would map the rest of this range would be up here. Okay, and the reason I would map this is because it was clear support through here, it then became resistance through here, right? Broke out of it, deviated up into this supply zone, then it became resistance again down at this level. Okay, so you can tweak, and the lower time frame you get, make sure you line up your support and resistance levels with your price action. So keep it really simple. Okay, when we're in a range bound environment like this, you map out your range on the higher time frames as well as the lower time frames. Then you want to be looking for trades at the bottom. Okay, you want to be doing your work at the extreme. Trades at the bottom, trades at the top of the range, and then if we deviate, we lose it, you look for short opportunities at these ranges. Okay, just like when we got out of it here, look for long opportunities here. Okay, so this was resistance, broke out of it, swept liquidity, moved to the upside. Perfect rounded retest, and we took off. This was a deviation, didn't give a retest. Here, this could have been a nice short opportunity. Okay, big sweep of liquidity at that range high. So keep your trading really simple. Okay, you don't need a million indicators and a million lines on your chart and trend lines and all this sort of stuff. We just want to be mapping the most important and significant horizontal price levels on the chart. So that is how I use support and resistance level. You start mapping this with your confluence of your supply and demand and your liquidity and some other indicators, and you can build some really, really high probability, highly profitable trade locations. So As always, any questions, drop them in the comment section below, and I'll see you in the next video.